What's Alphabet going to, the importance of it, Josh, tonight is what? You're recently out of the name as of, I think, maybe it was a week ago today.
Yeah.
As a matter of fact, we're right around that period of time. Good read on spend. There's no question about that. Good read on the economy because of advertising.
Yeah, Google is important because it is the #1 or #2 largest advertising business in the world, certainly the United States, depending on which metric you're focused on. But it's a read-through to every part of the consumer economy. Travel had become a really huge portion of Google revenue in the post-pandemic period. So that's definitely something that we'll watch whether we own the stock or not, just to kind of get a little bit of a heat check. They're expected to report $89.16 billion in revenue, which would be an 11% year-over-year jump versus last year. If they can hit that hurdle, I think the stock should be okay. $24.68 billion in net income, which is $2 a share. That would be up from $1.89 a year earlier. Again, if they hit that number, the stock should be okay. It's a very, very inexpensive stock, not just relative to the other Mag 7, but on an absolute basis. Not the reason I sold it. I don't think it's expensive. I think they have other issues. So they just had a ruling go against them saying that search is an illegal monopoly. They're going to battle on that front legally. But they're also battling on that front for user attention, because Perplexity is not going away. I saw the guy this morning on Squawk. He was great. Search is a huge priority now at Meta. It's a huge priority at, obviously, OpenAI. And Google's never really had competitors before. It came public in 2004. They already won the search wars before they IPO'd. This is a different situation. Now, the bulls would say, okay, I get it, more competition, unclear who's going to win in AI. That's why there's an opportunity created. That's why I could buy this thing at 15 times earnings or whatever. Go for it. It's not. I don't buy value tech. It's not my game. But I get it. There might be a big opportunity. I think this is an important report for a lot of reasons, and I'll be paying attention tonight, even though I have no position currently.
You guys do?
Yeah, and I think the concern for me is obvious. Obviously, we've seen Timo and Shein advertising spending slowing down. You know, Google ads, 21% of Google ad revenue is retail. Right. Yeah. So when we think about forget about a recession, if just a slowdown, we know ad spend will slow down. So that's obviously a concern for me. The other is CapEx. What's going on with CapEx? What is the true number going to be? I think the bright spot for me as it relates to Google is YouTube and obviously Google Cloud, what is starting to increase profitability there. So that for me is what I'll be watching closely. But
not necessarily in that order. I just want to make
no,
this
not
clear,
necessarily that order.
Right?
No, not at all. Not at all.
The latter is the one that is most important, I think, to this market.
You got it.
Right, in terms of the CapEx.
Cloud revenue,
yes.
Cloud revenue growth is the most important. The bogey is the bogey is 25%. That would be $12 billion in cloud revenue for Q1. If they don't hit that, the stock's going lower. Now, keep in mind that's a 25% growth rate, which seems great. Unfortunately, last quarter was 30%. A year ago was 40%. YouTube's important, also an ad business. 11% revenue growth is what's expected. That would be like $8 billion. If the YouTube number is good, if the cloud is good, I think we could overlook weakness in like Chinese e-commerce. I think we can get past it.
Right.
But again, there's a lot of question marks.
And I think it's a fair point even to mention that Google is value tech. I mean, 18%, trading at 18 times forward, but only a 7% growth rate.
Yeah.
Man, how the mighty are falling. This is value tech. I get it. Listen, great points made by
it's
both
right
of
in
you.
your wheelhouse now.
Stop. Stop.
I mean, the argument has been made for the longest time that it has been the epitome of value, big tech, no question about that.
Which is why it could work.
Relative to the valuations of the other names, it's always been among the lowest val, along with Meta.
Yeah, let me say two things. One, I want to make sure that we're not really, pounding the heck out of it in terms of the labels that we're putting on it. A 5-year track record on the stock, 20%. 3-year track record, annualized 10%. That was an annualized number. It goes through periods where it wanes. We know that, absolutely. This, for me, I'm not going to add to what Jason and Josh have already said. They've covered the major points. But going back to where I was at the start of the show, if you're going to build an all-weather portfolio, that we don't know if the next 10% on the S&P 500 is up 10%, down 10%. I want Alphabet in there. And look, I'm not taking a shot at you, Josh. You could take a shot at me and say, well, Jimmy, you don't own Meta. Fine. Okay, I don't own everything, but I do own a lot of quality like Alphabet, and I'm comfortable with it.
You worried about the CapEx side of this equation?
For the big picture of the market, for the economy, the global economy, I'm not going to say I'm worried.
I'm not talking about the global economy. I'm talking about relative to the AI trade as it relates to Alphabet.
I am paying close attention to it. Close attention to it. We have this teetering going back and forth. Whether it's Alphabet, whether it's Amazon, whether it's Microsoft confirming their CapEx plans, and then you get once a week a headline, oh, Amazon's pulling back, Microsoft isn't doing this data center lease. So you betcha I'm paying attention to it.
That's the thing I'm least worried about.
Good.
I think they'll affirm CapEx because the narrative on the street around Gemini and Google's AI ambitions is that it's make or break for the company. It's existential. It's not nice to have. If they don't win, if they're not among the 3 top AI plays on the street, then what is it really? So that's the part that I think is probably the thing that we could worry least about. They ain't going to come out and say we're throwing in the towel on AI. It's just not going to happen. No.
So
they may quietly spend less than we thought they would, but you won't know about it.
Let's buy more NVIDIA then.
Mm-hmm. Well, I mentioned that stock, but also, price targets today, since we're talking about mega caps. Meta, target cut to 650 at Deutsche. Meta reiterated top internet pick at Citi. It was also, by the way, reiterated a buy at Deutsche. No one's getting all, bared up on those kinds of names. Even though Goldman takes Microsoft's target down, Bryn, today, they reiterate buy. They go to 450 from 500. It's just, I think, a move by everybody to just be maybe a little more realistic to where stocks can potentially go if this trade war persists in the manner it does. Now, a headline, a quote-unquote deals, plural, anything can change this.
Right. And so I think that, once again, analysts follow price. So prices are falling, so analysts are going to pull down their price. They have to. They have to just be cognizant of the market we're in. I think Microsoft, what's interesting, they're looking for revenue and earnings to grow about 11 and 10%. So decent earnings growth. Satya yesterday had a great post about how he uses Copilot and the agents, and he's using notebooks. So they're really obviously trying to push Copilot, show users how to do it. We'll see what happens, but I think, like Google, Microsoft, it's going to be about Azure. And I think the street expects about 31% growth rate in Azure. If it comes in at 29 or 28, that will definitely be a negative for the stock. And it's also interesting, where these big tech companies have huge international business. Microsoft's about 52% in the U.S., 48% overseas. So I know the dollar's been weak, but I will say, the strong dollar narrative has been real, where these companies are like on a constant currency basis. So I think if we continue to have a weak dollar and that becomes more of a stable place, that is incremental for these tech stocks that have so much exposure overseas.